First of all, which is your outlook on the global economy?
Well, we think that the global economy is recovering. It's recovering from the first quarter slump, in particular in the US, where we see that the manufacturing sector is gaining traction. We see that the consumer is also starting to gain traction. So in that sense, the US is going to be the swing to the positive. The Eurozone is clearly advancing at its pace. We think that 1.5% growth for this year is in the cards, and if anything, the risks are tweaked to the upside. The big caveat here in this kind of global picture is our emerging markets, which are facing a deceleration, in particular Brazil as well as Russia, which are basically in a recession. So in total, we think that the global economy is recovering, and it's going to be on a fairly solid footing for the remainder of this year.
Which areas will do best and why?
Well, we simply think that the Eurozone is going to be steady, will go steadily with a depreciating currency which helps to underpin growth, with an ECB which will remain very, very accommodative and will pursue its marathon to go all the way through to September 2016 with its purchases. All of that liquidity is going to be positive. As I said earlier on, it's going to be the US which has the swing in terms of GDP. So in that sense, these are the two big countries which do very good, in particular with the help of the ECB and liquidity.
Considering all that, which is today your favorite asset allocation? Which asset allocation would you suggest and why?
Yeah, well, I think we have to distinguish basically two different time horizons. First, the positive outlook for the rest of this year and into next year. We think that risky assets are the place to be. Risky assets, what I mean is basically equities. In particular, we think that Eurozone equities should do fairly well as emerging Asia and Japan on the back of economic reforms, as well as ultra-accommodative monetary policy. The US is going to be in a different situation with monetary tightening in the US happening in the latter stage of this year. In the short term, yet we think that some prudence it has some merits, simply because there is the first rate hike in the US, which we think is going to happen in September, but even more importantly, the shenanigans and the problems as regards to interest rate rises in the 10-year yields, Bunds in particular, plus the Greek problems, and these negotiations will drag at least until the end of June, maybe even further into July, and that spoils sentiment. Yet again, the fundamentals are positive, and we would view this kind of correction which we're currently in, as far as equity markets are concerned, as a buying opportunity. Into next year, risky assets, equities are the place to be, simply because we think that earnings will grow to the tune of 5 to 10% going to next year. Of course, the Fed rate hikes are a bit of a headwind, but not as much, because they are simply a confirmation that the economy is growing in the US. Yet, the caveat to all of that is clearly that fixed income yields, as far as US Treasuries are concerned, will continue to move higher, and that calls for a prudent stance, or in our terminology, an underweight. Credit sits in between equities. They are benefiting from low default rates, which will remain low for the foreseeable future, and that will incentivize and encourage investors, long-term investors, still to buy credit, for which we are neutral.
Thank you for your time.
Thank you very much.